We just had Kelp DAO here. We've had like attack after attack after attack. And to me, it raises the question, and I'm curious, for the rest of the group, do we have to change our default thought model of transactions are legitimate?
It's a good question, but you risk giving up concepts like immutability and the concept of non-recourse and finality.
Okay, so I will grant you that on finality. Yes, because if we slow down transactions processing, agreed. But immutability is just that we can't change the history of a chain. If there's like a 280 million exploit and it goes into a queue and everybody looks at it during the delay period and says, oh, that's not correct. And so a transaction spits out that then reverses it. You still have an immutable chain where the history is transparent, known, and unalterable. It's just a question of under what terms do we let them sort of transact down the chain, right?
Yeah, it's interesting. I mean, you're asking all the right questions. It's not in my head there. And you start to see how things naturally get centralized over time. So over time, people flow risk to trusted parties. They're trusted because they're regulated and capitalized and have all sorts of oversight and auditing. We have to find a way to keep this going with code and technology and not bring it back into the system. One would think that there's a way to transfer the risk of each transaction. Maybe it's not, at the pool level, maybe it's at a transaction level. There's more work to be done. It's a major setback. This puts DeFi back a couple of years.
I think. Go ahead, Chris. Oh, I was going to say, you can try to build these mechanisms. I thought deeply about this kind of stuff as a sort of mechanism builder myself. We used to try to think about how we could introduce these kind of mechanisms into our protocol, and it becomes quite difficult because there's all sorts of nuances here and sort of edge cases. When you think you fix one thing, it's like pushing a bubble under the carpet. You just sort of move it somewhere else, but the bubble's still there. If you want to do rate limiting, for instance, on protocols, you need to know what are you actually limiting. What's the actual unit of limit there? Is it the underlying asset? Well, the amount of asset in circulation can change, so that needs to sort of adapt over time. Its value could certainly change, a lot. So then you need to start to bring in oracles and third parties, and that introduces new dependencies and things. So adding these mechanisms in principle sounds like a great idea, and people often ask builders like me, why aren't there more of these? And it does come down to just being very, very difficult to do it without adding new trust assumptions into the mix, and that carries a cost ultimately.
So I strongly agree that it carries a cost, but let's look at the counterfactual, which is that in 48 hours, DeFi TVL has gone from 99.5 to 86.3 billion. I think the market may be speaking that the cost is what is currently there is just rapidly becoming unusable.
Too high.
Yeah.
I agree. I totally agree.
So, Michael, I would ask you, as a builder yourself, and I know some others that have been posing this question to people, I kind of see two paths here. Path number one is increasing, call it slowness, checkpoints, multiple redundancy in the system one way or another, because Chris has said the latency problem is real. And if we're going to be optimistic about transactions with zero latency, I don't see a pathway to interdicting these things. Caveat, if we continue to build relatively complicated things, because as a counterpoint, let's look at a model that's largely been successful and stood the test of time, which is Uniswap. Right? If all of our LP pools are segregated and unalterable, and to upgrade, we've got to withdraw from V2 and go to V3, and withdraw from V3 and go to V4. And all of these can sort of blow up in their own self-contained box. Yes, Uniswap is a very simple thing. They are not building complex, layers upon layers upon layers. But is the future, I guess I would ask you as a builder, more likely to be, actually, we need to simplify a lot of these things and remove the attack surface area, go back to basics in DeFi? Or is it, if we want to retain this complexity, we need to think much harder about security, which may, as you noted, lead to certain forms of centralization?
This came up a lot through my time building a lending protocol. Ultimately, an AMM or an exchange is very self-contained. It really doesn't care about the outside world. It just looks at what's inside, and it has to try to balance a single invariant in the pool. If you look at a credit market or lending market, there are all sorts of dependencies, and the credit markets really care about the outside environment that they sit in. So they care about the volatility of the assets. They need to know the prices of those. The prices aren't intrinsic to the assets, so then you have to have some kind of third-party report on those prices. Liquidity is a massive issue. A DEX doesn't care what the liquid environment is outside of the DEX, right? It's it can operate with $10,000 or $10 billion. It doesn't matter. But lending protocols, as we've seen, with this, with the liquidity crisis we're in now, very heavily dependent on what else is going on. And I think that's what makes it so difficult to build a fully truly immutable Uniswap-like lending protocol. We've tried to get as close to that as possible. Morpho also building with similar sort of mindset, trying to keep as much of that as you can while still offering a viable, capital efficient lending market. It's just I think, but at this point I'm resigned to say that it's just not possible for credit. Really, we've seen many teams come up with all sorts of interesting ideas on how to do this, and I just don't think it's possible. So then we have to accept. This is the state of the world now. This is how it has to be. What's the minimum amount of centralizing force that we can add back to these systems to make them not collapse so spectacularly when they do, whilst maintaining the core principles of DeFi and disintermediation, composability, and all the rest of it.
I mean,
we saw.
Go ahead, Chris.
We saw Drift partner up with Tether. And I don't know, is it a centralization force that's going to restore security? Or is it just the resourcing that you need to have just to go through like inordinate amount of audits, bring in the AI? Like clearly for this industry to move forward, we need to provide confidence in whatever protocol you design. So I guess, is centralization the only option, or can, like you're seeing this partnership between Tether and Drift, don't know all the details yet, but is it more of a resourcing issue that's really hard for a startup to compete with?
I really don't think it is. I think we talked earlier about Mythos, right? Finding bugs and flaws in 26-year-old operating systems. The amount of man hours spent on that, is just more than anybody could afford to ever spend building a DeFi protocol, and yet there were still bugs that could be teased out there. So I don't think it's purely a resource issue. Everybody's really cognizant of the importance of security, and they really are trying. It's very it's just a very hard problem. I think it's sort of unsolvable at the code level. So we need other fail safes. We need other mechanisms that are introduced. I think at this point to help safeguard things a little bit more than just relying purely on code alone.
So working backwards, right? Like this is me putting on my business school professor hat, but looking at some of the lessons from history, I feel like there are two paths that we can go down here. One is exactly what you said, which is looking at TradFi lending markets and starting to build in a lot of the fail safes in modern markets. Like, great example, if you have, call it $200 million of supply, and somebody deposits $500 million, not making all of that available for borrow immediately, right? Like allowing that only to increase by, call it 10% per day or something like that, gives you a very long runway to interdict these things. And yes, it obviously makes that protocol somewhat less efficient from like I can't take a $300 million flash loan or, immediately deposit something in size, but it might also be fair to say maybe that's a problem, not a feature. And why are you so intent on doing this like literally right now at 3 a.m. on a Sunday becomes a valid question, along with many of the other redundancies you build in. The other one, though, to go the other way on like a lending protocol is, I know this makes it less liquid, but there's no reason you can't structure it like an AMM of all of these are essentially bilateral offers for lend and borrow. And then you don't have this contagion risk, right? Like I will lend $100,000 of USDT at this price, and I will accept the following things as collateral. And that's that. You can have like these prepackaged boxes where each person can do their own like lending in terms. The problem you run into there, which I think, you've spoken to this in your earlier answer, is that's less efficient than it might otherwise be. Like I if I recall, I think there was an early version of like Sushi Swap's lend protocol that was similar to that way back in the day.
Exactly.
And now
It's
this
been tried. Yeah, it just didn't attract enough users. It was so clunky, sort of almost peer-to-peer like, and when you're competing against a pool model, which is, I can just deposit and withdraw whenever I like, and there's so much liquidity that, people think it's about the technology. It's really not. What Aave and other like really large lending protocols are selling is liquidity. Yeah. It's that ability to go in and take out those huge loans and repay them whenever you like. That's the main product. When you've got liquidity, that's king above all else. And so when you have these isolated, almost peer-to-peer like lending systems, much more secure, as you say, you don't need all these external dependencies and all the rest of it. You just need to trust that the code, a very simple piece of code, works for that particular loan. But then it's just, how do people find each other? That's the problem that I think Compound originally solved, and that Aave, heavily modeled on the Compound system, followed on with, and it worked so tremendously well that it's scaled up to billions and billions of dollars. But with it has come this, other challenge, which is when things go wrong, they sort of tend to cause contagion in a way that those isolated models don't. So, yeah, we've experimented a lot in DeFi at this point, and I'm sort of resigned to the fact that maybe it's just not possible to get the best of all worlds, and that we're going to have to sacrifice something somewhere along the line.
I will say, as a closing remark here, as we are hitting time, that I have resigned myself to the belief that I think you're probably correct about that we are not going to be able to have our cake and eat it too. And we're going to have to figure out which, by the way, there are multiple paths to trade-offs, but we're going to have to tolerate some of them, because one thing I think all of us agree on is the current paradigm is not sustainable. If you like this segment, please like, subscribe, and tune in every Monday at 4:30 p.m. Eastern Time. I'm Austin Campbell, the host of Bips and Bips, along with my friends Ram Ahluwalia and Chris Perkins and our slate of exceptional guests. Every week, we're going to discuss macro, crypto, and the collision of worlds, covering topics that move markets and shape the financial landscape.
If you've been loving Bits and Bips, don't forget that the show is transitioning to its own feeds on X, YouTube, and your favorite podcast player. If you're not already subscribed to Bits and Bips on its own channels, go there now and hit that subscribe button so you can keep up with our twice-weekly live streams and Macro Meets Crypto breakdowns. Bits and Bips will only be on the Unchained feed for a few more weeks, so subscribe today to be ready for launch. You can get all the links at unchainedcrypto.com/bitsandbips.